Okay, good afternoon, everybody, and welcome to today's episode of Trading the Forex Market. Thank you for coming. It is always important that we start by recognizing your presence in every of our, webinar sessions. You've always come around, entertained our calls to join us during the sessions. One important thing that would always stand out for us when we talk about trading is the fact that trading isn't random. And this is a factor that every one of us at HFM believes, and we try to also push to our clients in the market. So thank you guys for joining us today. Once again, my name is Emmanuel Akinola, market analyst at HFM Nigeria. Thank you for coming. Please, the chat box, the Q&A section is opened. So if you have questions, maybe while the session is going on, please, you can always express yourself with the Q&A box. We're going to, read them and answer them at the close of the session today. We have brought a very interesting topic to you today, MACD and RSI. MACD and RSI, two of the most popular indicators in the market. You know, almost everybody knows about MACD, almost everybody is informed about, RSI, and these indicators are really key when it comes to trading. And that's one thing I can tell you. They're really important when it comes to trading. They they help a lot of traders to make decisions, but a lot of people tend to also misplace their priorities when they are using this indicator. In the first place, we need to understand the place of indicators in the market. A lot of people don't know how to put indicator in its place. When someone gives you an indicator or someone exposes you to an indicator, you immediately think, oh, this is the secret I've been looking for. Oh, this feels like the factor that has been missing in my trading. And then you begin to throw away every other thing that you need to know. You begin to throw away every other factor that needs to be incorporated in your trading and begin to solely trade some of these indicators. Indicator trading is not a problem, but you need to learn the correct application of these indicators in the market. Let me tell you something. I told those who were around on Wednesday during the foundation class held by the HFM, you see, indicators, tools are expected to be means to an end. They're not expected to be the end. What that means is we don't want to use indicators as the sole decider of our decisions in the market. We don't want indicators to be the author and finisher of your faith. Or how do I put it again? You don't want indicator to be your sole, you know, decision-making factor. The market moves through a set of information that is made available to you through, interesting news media outlets like Forex Live, we have Forex Factory, even HFM's website has economic, news and analysis for you to also peruse to have access to what is going on in the market. Information sets the pace for trading. Information sets the pace in what sense? Information determines how the market is going to behave. Information determines how prices are going to move. Information determines the directions to which you can expect prices to move in the market. But eventually, how price might move in that direction might be subjected to technical analysis, which means even though you believe that prices should rise or you believe that prices should fall, it might not do it on a straight line. It might not do it the way you expected it to do it. So you might still need some technical knowledge, understanding for you to, determine the direction you think prices will go and how you think it will get there. So when we talk about indicators, we use them as a means to an end, which means analysis must have been done, conducted for you to determine, oh, I am meant to be buying, or oh, I am meant to be selling. If I have made that decision, I then look forward to, okay, how then can I coming into this particular direction? Am I talking simple support and resistance? Am I looking for an entry of a support or an entry for a sell of a resistance? Am I thinking moving averages? Am I looking for a bounce of maybe the 50 moving average or the 20 moving average? Am I looking for a test of the moving average from below for a downside? What am I looking for? Am I looking at the flow system for, entry signals for a buy when price trades above the trigger line, or for a sell when price is trading below the trigger line? Or am I looking at Fibonacci retracement levels as my entry point? Am I looking for maybe a 23.6 level or a 38.2 level or maybe a 50.0 level as a point where prices could test for me to, look for further upsides or further downside? Mention it. Any indicator or any tool that you think on a technical analysis is expected to be used as a way to enter a direction that you must have known already, which means you must have conducted research, you must have conducted market analysis, and then say, okay, from everything I've seen so far, from every information available to me right now, I think I should be buying this particular instrument. Or I think I should be selling this particular instrument, but then how can I sell it? Or what other things can also influence my decision on where and when to sell it, or where and when to buy it? And then that is when indicators come into the picture. We're going to be starting with one of the most popular indicators today, but also permit me to say one of the most commonly used indicator also by new traders or even existing traders, but also one of the most abused indicators also in the market because of how simple it comes. It's so simple that probably they need to write maybe 5 lines for you, and then you'll be able to trade this particular indicator. It is your natural overbought and oversold indicator, the one and only RSI, the relative strength index. The relative strength index, popularly known amongst all traders in the market, both old and new, both novice and professional. It's simple. It's actually one of the simplest indicators you can find. Like, how come? A lot of people, when they hear RSI, they feel like, oh, this is my world. This is simple enough for me to, disappear with, to just go and use to trade. What we're going to do is show you how it works normally, and also find you a little way to which you can do it more professionally instead of just, you know, going with it randomly. Yes, we'll try a way to do that. So the RSI is actually an oscillator in the market. It shows market conditions under the umbrella of being overbought or oversold. That is, when the market has pushed a direction for so long. You see, this concept came from the concept of gravity, that says that whatever goes up must come down, which means it is natural that we believe that if something goes up by so much pace, or it has gone up over a long period of time, naturally it needs to come down. Or when something goes down for so long, we also believe that naturally it might also need to go back up, right? So think about it this way. Think about an airplane. Right? If you go to an airport, two things will happen. Number one, a plane is either flying, or number two, a plane is landing. Right? You know that's what it is. It is either a plane is flying or it is landing. Now, listen to that. One flying, one landing. In fact, the same plane can be flying and landing. Why is that? Because a plane cannot remain in the sky forever. It can't be there forever. When it leaves a particular trajectory, or when it leaves a particular floor, it already knows if I get to this particular point, I need to descend and then land. Which means We're looking at ascension, and then when you ascend, at some point you need to descend. Also, when you descend, also at some point you also need to pick up. So that's the idea behind, the RSI. That listen, prices would always, rise, but when they also rise, they will rise to a certain point. It might not be able to go beyond this region. Gravity might pull it. Also, at the same time, when prices also falls to a certain point, it could also fall to a point where it might not be able to sustain that downside. It needs to go back up. Hence, when we came up with the language of overbought and oversold. Usually, the 70-30 is one of the most popular levels for RSI, but some people also prefer to use 80 and 20, you understand, just to give price more room to express itself so that they don't get carried away by some fake movements or fake outs in the market. So some people might try to adjust the band to about 20-80, but most people use default 30-70, all right? So 30-70 is the default, but some people might also adjust it sometimes to about 20-80. So below 20 and oversold market, and below or above 70 and overbought market, which means it looks this way, or the idea being conveyed is this way, that prices moving into this territory needs to go up also, but when it moves also into this territory overbought, it also needs to come down. So the idea from RSI is we can look for an opportunity, to buy the market when it is oversold, and then for us to sell when it is overbought. For a lot of traders, they mostly use it to predict reversals in the market or when retracement of an oversized move might potentially start. But a lot of traders see it as a buying and selling machine, which means a lot of people just look out for, oh, RSI is now oversold, let me buy, or RSI is now overbought, let me sell. Well, for a lot of people, that's what it is. If you ask me what is the success rate, I honestly cannot tell you. What I can tell you is this: it is not enough. It is not enough for you to see RSI in oversold and then believe that it just means you should buy. The question is, how long do you even think you're going to buy for? So that's a question you need to ask yourself. So, because I'm not saying that when price gets into oversold, maybe there is no possibility of it jumping or reacting to the upside. The question is, how long do you think you could buy for, or should you buy for? Because you don't know. Even when price decides to jump off an oversold region, maybe pulling back up again, it might be doing that for retracement purposes and still move lower. We've seen situation where price remains oversold for days. We've seen situations where price will be in overbought for days, which means that rule of when price goes into oversold territory, let's look for a buy or let's get a sell when price goes into overbought territory might not be 100%. Don't get me wrong. I'm not saying it's not working for some people. I'm not saying some people are not using it to trade, but I'm saying it is not that efficient if you use it that way. So, what are the ways to which you can still use this same knowledge of, overbought, oversold, or the prices would rise from here, or the prices should fall from here? How then can you still use this same set of information and it will still make sense in trading? How can we do that? How can we do that? Like, okay, so if we're saying maybe in of itself, it might not be self-sufficient for us to run away with. So what then can we do maybe to just make it slightly better in trading? Okay, let's try that. Let's try that. What can we do to possibly make this a little bit better in trading? Rather than just focusing on let's buy when it is oversold, let's sell when it is overbought. Let us think about it. Number one, what is the current situation of the asset you're looking at? That's the first thing you want to think about. Is this market that I'm looking at a seller's market? Is it a market that is looking to go down more? Or does this look like a market that a potential reversal might be taking place? Does this look like a market where prices might still rise? Or what are we looking at? For example, I'm looking at USD CHF for one, and what I'm seeing is a movement where prices currently looking to completely reverse the moves from yesterday. We saw this interesting movement yesterday, following a beat of what's it called, retail sales and unemployment claims for the US, and then dollar jumped, right? Dollar had a very massive jump to the upside, and then we've seen that also price could not sustain that jump because almost immediately price started retracing gains, and then we could see it clearly on the USD index, which shows the performance of the dollar in the market. Let's also have what's it called, the RSI showing here as well. All right. So I'm also looking at the USD index, and what can I see? I'm seeing something so similar to what I have on the USD CHF chart. It looks almost the same. If you look at this movement and you also look at this movement, it looks so close. Like what's going on, right? So I'm looking at why this looks like this. What is happening? From what I can tell you, the market is mixed today. It's Friday, it's the weekend. There's not so much going on in the market, which means there's really no specific reason why the dollar is weak, But yes, the dollar is currently the weakest currency in the market this morning, but there's no pinpoint reason for the weakness of the dollar. But from what I can tell you, it feels like the market is looking to completely erase this movement. So what I'm looking at is this. Price is looking at, completely erasing this particular sharp movement to the top, which means there's possibilities that this is still coming back to this point. So I'm looking at this and I'm like, okay, looks like there's still room for price to head lower. From what I feel like market is just looking to cover up that move from yesterday. It looks like we're just heading down to completely erase this upside. And this could happen with a quick retest of this level for price to move lower. So we could be looking at the market ending up somewhere around here today, completely reversing those moves from yesterday, which means looking at this, I still feel like maybe there are still room for downsides. Don't forget, the US is fighting a battle, right? There's calls for recession in the US, credit risk, also a problem in the US. Stocks are higher, which means dollar should be losing value. We also have calls for 50 basis point cut in interest rate for the Federal Reserve to come in the month of September. So which means, yes, we're justified. Looks like prices is just looking forward to closing the gap from what it did yesterday. So if I hold on to that prices are going down, looking forward to covering up that initial upside, it means there is still move or room for downside. Okay, let's go back to USD index. So I'm still seeing some other further rooms for, downside. Let's go here. All right. Now you can see something. This is where the move started from, right? Look at where it is. Now look at where oversold is and look at the space. You can see that by the time price gets here, you know, it would coincide with this also getting here. It will most likely coincide because RSI lags, so which means it follows price movement. Don't worry. So it means it does not lead the market. It follows, it lags the market. So it means by the time price is going to, test this particular support, right? There's every possibility that RSI also has gotten into, oversold territory. Then the question is, if this was a normal day, if this was maybe today was Thursday and tomorrow is Friday, or maybe today is Tuesday and tomorrow is Wednesday, if the next day is still potentially a working day, right? The question now is, what do I think would happen from this point? So from this point here, when RSI also is going to put his mouth into oversold, what do I think? What do I think? Do I think this would give me an opportunity to buy? If it's going to give me an opportunity to buy, the question is how long? Because don't forget, we know that support naturally is a level that helps price to rise. We know, even though it might just help you rise by a little bit, a support naturally just helps price to rise. So the question is, that's a support that is RSI into oversold, which means they both agree that prices should rise. This support agrees. RSI also agrees for an upward movement in price, but I need to also find out what the market thinks. You need to understand that you need to think about what the general market opinion about this instrument is also matters. So what is the current general market opinion about USD CHF? Maybe if tomorrow was still a trading day, I need to think about that. Number one, the overall market condition is a little bit calmer, positive. All right. And I know that JPI CHF are more traditional as a safe haven compared to what's it called? The US dollar, which means under normal circumstances, I can expect that the CHF might potentially lose some grounds if the current sentiment remains within positive territory. I also want to think about the fact that if stocks are going to continue to rise, then it might mean that dollar also would potentially continue to lose value. Because we must also know that there's an inverse relationship between the US stock market and the value of the dollar, which means if US 500 is going to continue to rise, the positive market is continuing to take place, then dollar also will continue to fall, which means now we have two weak currencies paired against themselves. This is USD potential weakness showing. This is also CHF potential weakness showing from positive market sentiment. Now I'm looking at a weak against a weak currency. By the way, a weak and a weak currency market is not for you to enjoy trading. That's one thing I can tell you. Trading weak against weak is not right. So if it was me, I am done analyzing this pair. I'm going somewhere else. Now that I've realized that I'm trading a weak against a weak, which means price can go whichever direction it wants to go, either up or down. Naturally, I would have gone somewhere else. But for teaching purpose, let's just continue. So please hold on to that. When you have a week against the week, please avoid it. Go somewhere else, all right? Look for another pair where you can find a disparity. But just for teaching purpose now. So now I know that the state of the dollar still spells weakness. The state of the CHF still spells weakness. But I want to make a decision on what I think. So right now, what is the current market focus? Well, CPI on Wednesday wasn't that poor. CPI was 0.2% poor CPI, and then headline inflation was about 2.9% compared to 3.0. Retail sales was good, unemployment claims was good, which means the risk of recession in the US is also starting to, the odds of recession is starting to fall as well. So I still believe that dollar will still be, a better currency compared to the CHF. Now, I'm not saying they're not both weak, but given current circumstances, I still believe you can see the answers I'm giving. Oh, the risk of recession in the US is starting to drop. Why? Because of recent data trajectories showing that things are not as bad as we thought it is, right? Which means market sentiment is still calmer for now. So I still believe that the dollar still is in a better spot compared to the CHF. So that guides my decision that I want to buy, right? So that is guiding my decision that I want to buy, not because of RSI. So I have found justification for my buy via information available in the market. Good. All good and fine. So I have justified my reason for a buy. I've also spotted a good support level. I've also seen that RSI is also going into oversold territory, which means there's every potential for price to rise. Now, what I have done is I have given myself enough confidence in form of a conference for this level. I hope you're still following. I have gotten myself, confidence in this level for a buy. But don't forget that I did not justify this buy from technical analysis. Technical analysis only provided a confluence in entry point, giving me more confidence. That's a support, and I know that naturally when price gets into that territory, that's a good level to buy from. And then I'm also seeing that RSI is also showing movement back into, oversold, which means a potential jump as well. That's a confidence for me. So I believe that, okay, that's a room for me to look for further upsides in the market. You see, I did not just open RSI and say, am I buying or selling? No, I had to justify what I wanted to do, still look for good levels in the market, and then added more extra with what RSI is saying in the market. So this is one way to which you can use RSI by, having an opinion, a personal bias about what you want to do, and then try to find a confluence with RSI, seeing or seeking RSI's opinion on if there's a confluence somewhere to which you can use to enter into your trades. Another thing that I want to add with RSI that could also be good for you is you could also note some key levels with RSI. Please, 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 you could also do some support and resistance with RSI. What does that mean? It means the way you know about swing levels, for example, the way we know this to be a resistance, right? Because we could see the reaction, right? The way we also know this to be a support, because we can see the reaction, right? The way we also know this to be a resistance, because we can also see the reaction. Look at all of these levels. If you look at all of these levels, let me show you something that will blow your mind. Look at it. Well, look at it. One, also look at this two to this point here, this particular point here. Then look at these levels here. This was a resistance here at this point here that later became, that we drew here. Also, it was resistance at this peak point here as well. You can see. And then this level here is this one up here. You can also see where price found resistance. And then you can see that this, what's it called? Now, what am I trying to show you without overclouding the chart is, you see, swing levels also shows on RSI, which means you can do what's it called? So analysis on RSI as well. You can infer some levels of price action also on RSI, which means maybe you are the type maybe you're not that conversant with what's it called? Our market information, what is happening, and all of that. And then maybe you still want to just use RSI as your entry point, exit point. Maybe, for example, you were interested in the fact that, RSI goes into oversold, so you want to buy, but you don't know how long you should buy from because you think maybe you should come out from here. There is higher risk that RSI just pulls up small and it continues to go down, which means price action can also show on RSI. And that means You can also mark out levels of support and resistance on RSI. This is what I'm trying to say. Let me show you something. Look at this. You can begin to mark things like this and say, oh, there is, there's like a resistance here, right? And there's also, at least for now, there's a confluence of another peak level here. This was a level that was resistance at this point. Then it became support at somewhere around here. You can also see it was also a level that was like resistance around here, which means if I was interested in maybe a buy of RSI's lower level on this oversold, for example, maybe I was looking for a buy here, I wouldn't be looking for any kind of long-term kind of take profit. I wouldn't be saying let RSI go back above 70 before I close my trade. My mind already knows that this is, a level that was resistance at this point, that became support here, also support at this point, and also was used as a resistance somewhere around here, which means if I was going to come in off a buy at this point, I am definitely looking for a TP when it gets somewhere around here. I don't want to overstretch my luck, which means I don't want a situation where price just ordinarily pulls back and then wants to continue to go down. So rather than me still being in the market, when it completes that pullback and is trying to go back down, I would rather exit my trade at that point, which means you can still do some, you can do some elements of price action with your RSI. That's another thing you can do. It could also point you to where there are some really solid levels of support and resistance on your screen as well. So rather than just using RSI as overbought, oversold, add extras. Do some bits of price action. Look for some bits of confluence with analysis in the market. How does it adjust itself to normal price action with you? It helps you to know if you're about to enter into a bad trade or not. It also tells you when it's about to be a reversal in the market. Don't be complacent with your RSI. Don't make it too simple. Don't make it to be too straightforward. Once you just see overbought, you just think I buy, and then where do you even buy to? You don't know. You see oversold, you think, oh, that means You have to be careful with it. Let's look at another chart. Let's see what another chart has to say, and then we quickly move on to MACD. I think we probably have about okay, about 30 minutes or thereabout. I think NZD is a chart of interest this morning. We saw some moves to the top today, about 49 pips already. Okay, let's start with this. Number one, NZUSD is the top moving instrument in the market today. I mean, clearest with NZD stronger than USD. All right, so NZD is like currently stronger than the US dollar in the market. So we're looking at simple price action for now. There's like a resistance holding price right here under normal circumstances. And I can also see that RSI is also struggling around the 70 region. I think there's something around here as well that has been keeping it at bay. There's this bit of price action at this point that is also keeping it at bay. You can see it's struggling around here, which means it's not finding it comfortable to move above. If it was me, under normal circumstances, with the fact that I know that I want to buy NZD USD, right? So I'm thinking, where can I buy from? I'm thinking, oh, a good level of support will not be a bad option for a buy, which means under normal circumstances, without RSI, we know we need something like this. price pulls back to a level. If it pulls back to a level, we can, get in on further upside. If market maintains that trajectory, for NZD USD, right? So I feel like this makes sense for me. I just need a little pullback to a good level of support. I can get in on a buy to the upside. But then I'm looking at, okay, so this level for me, let's say this level for me is good. 0.600 is a good level on NZD USD region. Let's just use a line at this point. I feel like this is a really solid region for price to rise. Maybe price pulls back here and we can get in on upside, right? So, but do you know that? Look at this. There is also a price action level here. This is a level that was support here that became resistance at this point, right? And you can also see that why price was struggling here to try and break this level that it could not. It is also showing here that price also tried to break that level, but it could not, which means this absolutely fits this reaction. That is RSI also, if you can drop back to about 50 level, you still have the opportunity to move back above. As long as market is still saying that NZD is stronger than the dollar, which means now I can also see that according to RSI's movement, it is also letting me know that, listen, there's a good level around 50 region that can still help RSI itself push back up. That's a confluence for me, which means I can continue to, monitor this level as a good pullback point, for further movement of prices to the top. Can you see we are not just doing, is that overbought? Let's sell. Is that oversold? Let's buy. Who even said that it will compulsorily move from overbought back to oversold? No, it does that movement, normal price action movement as well, which means you can be using it as a form of confidence for the things that you already know. It is important. So please, 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 instead of just using your RSI simply as overbought, oversold, and practically just running away with whatever narrative it is showing, let us be more, put together. Let's add some extra things. Use it more with your information, use it more with price action, and let's see how that goes. This is really interesting. Please don't worry, the class is recorded, which means you can still come back to, watch this when you please. But quickly, we have to move to MACD. Let's quickly move to MACD. MACD. Moving average, convergence, and divergence. Moving average, convergence, and divergence. Well, this is actually a great tool if you also know how to use it. And I can tell you for a fact, if you go through the net, there are multiple, expositions on how you could potentially use um, the MACD for your trading. A lot of combinations are there, but I'll just tell you a few things about MACD. Keep it simple for the class, and we'll see where we can go from there. You see, one thing I can tell you about MACD for me is I use it for two particular reasons. Number one, I want to see when there's about to be a change in trend or a change in market momentum. Although it is something that moving average itself can do, but MACD adds that to what it can do and also tells you about, the strength of market movement. When price action is heavy, when volatility is heavy, when you expect price to, really move in a particular direction over time, MACD can show you that, which means MACD can do, because his name is even moving average convergence and divergence, which means there is actually moving average inside. So yes, the same way that moving average can tell when there's about to be a change in market trend, when a smaller moving average crosses above an higher moving average or below an higher moving average, we know that it means the beginning of maybe an upward price movement or a downward price movement. But then MACD can also show that. But not only can MACD show that, it can also show if market momentum is building. That is, if moves of volatility in that particular direction is moving fast, and maybe it's something you can catch on the swing, it could also help you know or give you an entry level. It could also give you an entry level. It could also give you an entry level. What am I talking about? Let's start with a few things. Number one, this is MACD. Let's understand it first. The first thing you must understand about MACD is the zero line. All right, there's a zero line, which is this point. You see, the histograms never cross. You can see it's like there's a bridge here. It's the zero line. All right, there's the zero line on MACD. And we have the histograms here that shows, market momentum, market movement, also shows us divergence, convergence of movement. But these are the histogram showing when prices are moving so well in a particular direction, either to the upside or to the downside, And then we now eventually also have the signal line, which is this one, this broken line. We call it the signal line. We call this one the signal line. If you look at the properties of MACD, you'd see that, let me see, levels. Yes, 12, 26, and 9. Yes, 12, 26, and 9, which is absolutely correct. Although you don't have to worry about the number. We just leave it at, yes. So you can see the signal line is this broken red color. Although I can change it from being broken, I can just use a straight line, make it a little bit thicker. It's the signal line. If you don't like red, you can change the red also if you want. So I think that is done. Good. So this red line, this red thick line is the one we call the signal line. Is the one we call the signal line. So now you have two things. Number one, the zero line that separates the top histograms from the lower histogram. Number two, you have the histograms themselves. And number three, you have the signal line. You have the signal line. So now, how does this help us? How does this help us? How does this tell us anything, especially when it comes to trading? In the first place, you see, one thing that must stand out to you is usually a change in market trend or direction shows up when the signal line crosses either above or below the zero. When the signal line goes above or below the zero, it could show the beginning of a new market trend or a reversal in the market. For example, at this point where prices was moving lower, right? We saw that the signal line also started moving down. The trajectory was lower. But at this point, here, the signal line crossed below the zero, which means that at that point, the market just showed us that, listen, now this market is a bearish market. At least on that particular time frame, we've now entered into seller's territory with the MACD signal line crossing below zero. But listen to this. You can see that it took time. It was after this all fall happened that we got the signal line moving below zero, maybe somewhere around here. Although we still got some sales, but not as much as we could have if we have gotten from this point. Now, this is to tell you also that MACD lags. MACD also is not your savior. It's not the most important indicator in the market. It's not that you just think, oh, once MACD goes below zero, it means I should sell. Not necessarily. The sale might have started and is getting exhausted already, especially if the preceding trend had gone far. Because in this case, we've seen some really nice movement to the top already beforehand. So for MACD to quickly adjust itself to then cross below the zero, it took time. So that is also to say that MACD also is not the beginning. It is to help you with what you already know, which means the beginning part also is for you to still know that your decision to buy or sell must be known before you trade, either MACD or RSI. Your decision to buy or to sell must be known, which means you must have already decided from your market analysis, oh, I am meant to be buying this or I'm meant to be selling this. So the MACD can only add extras to you. It can add extra confidence to you. It could add extra confidence to what you already want to do in the market. Because if you're just sitting waiting until the signal line goes either above or below zero for you to confirm if the market is now a buyer's market or a seller's market, the move might have finished. If we're lucky, sometimes it comes early. But that should not be, that's what I'm trying to say. It should not be the leading factor for you. It should not be the beginning for you. How many of you go to the airport and you just leave your house? You don't know where you're going to. You don't have where you're going to. You just go to the airport and you say, when you get there, you now say, see, so this plane, where is it going to? Now say, this plane is going to Yola. It's okay, book me, I'm going to Yola. Does that even make any sense? When you leave your house, you must already know where you are going to. Okay, today I am traveling to Lagos. So that when I get to the airport, it is easy for me to go to any airline and say, okay, can you get me the next flight to Lagos? Not the one that you just point to a plane and say, where is he going to? So when you also want to use MACD, you should already know the direction. You have to start by knowing the direction. Then every other thing that you know will come into hand. So number one, we now know that when the signal line is either above or below the 0 point or MACD, it tells us, oh, listen, there's about to be a new trend, or a current trend has changed. An uptrend has now turned to a downtrend, or signifying the beginning of a downtrend. Or if it now crosses above zero, saying, oh, listen, we're now moving into buyer's territory. Or the market is building a buying momentum. But listen to this. Now, when the signal line crosses either above zero or below zero, it is not 100% confirmed that you're going to have an uptrend or you're going to have a downtrend. No. It does not mean that every single time I see MACD just cross below zero, I just say, oh, this means there's going to be a downtrend. Who told you? It can immediately even go back above it again. Even when price crosses above the zero line, I now say, oh, this means that there's about to be an impending uptrend. It's not 100%. But do you know something that can give you confidence in that opinion that an uptrend is about to start and I believe it is going to be solid? Do you know what can give you that kind of confidence? Number one, you knowing fully well that analysis is suggesting it is the first thing. So when analysis is suggesting it, that, listen, this market has changed. Maybe you've seen the new data, or you've seen maybe a breaking news or something that is suggesting that this particular asset is expected to rise. Then MACD now crosses above zero. One, good news, good news. Analysis is saying a buy, a change in market direction. MACD now is above zero, which is also a conference for you, that because MACD now above zero is saying, well, this is the beginning of a bullish momentum, a buyer's territory market. Do you know another thing that you can add is to also look at the histograms. The histograms can also offer you more. You see, these histograms can then offer you, you know, how long, or the kind of belief that you can expect, or the kind of confidence that you can expect with that movement. Listen, when the MACD starts showing you small histograms like that, small histograms don't give us that much, confidence. It's not giving us that much um confidence or conference to what we need. Usually, the reason why you call MACD, okay, we'll get there very soon, convergence and divergence, is that when MACD begins to diverge from the zero line, that is, when the histogram begins to move far away from the zero line, that is, when the histogram starts getting bigger, they start dispersing, moving far away from the zero line. Usually, that's a conference for us that, listen, this trend, either uptrend or downtrend, is gaining momentum. Which means if the size of the histogram is not changing shape, it's just forming small, histogram shapes for us, we must be careful, because usually when they start converging, convergence of the histogram might show a painting or an upcoming reversal. When MACD starts converging, that is, the size of the histogram starts to shrink. When the size of the histogram starts to shrink, it starts coming together. You know what it means to converge, to come together. When MACD starts, suddenly shrinking, the size of the histogram starts to drop, right? It starts coming together. Oftentimes, it could be a signal for an impending reversal, oftentimes. So we are not just going to get carried away with, the signal line above zero or below zero is talking about bullish movement or bearish movement. No, we also need to look out for the size of the histogram to have confidence in the kind of momentum that the market is building. Not only that, you also want to pay attention to the divergence of the histograms or the convergence. Divergence is good because oftentimes it shows that the momentum is building and price might maintain that particular trajectory. But at the same time, convergence also is not bad, because convergence can also show you when it's about to be a pending reversal. Please give me a minute, guys. So sorry for that. So yes, so as I was saying, so not only does it just offer us a lot more, it gives us a little bit more in terms of confidence in what we want to do. So we pay attention to the movement of the MACD signal line either above or below zero. Like I said, when it is above zero, that's usually a very good sign for us of the beginning of a bullish momentum building. When it is below zero, usually signifying that we're about to enter into seller's territory. But at the same time, the histogram also is important. The bigger the bars of the histogram, the better the momentum of that particular movement. The lower it is, the market might be losing its momentum. And then when it starts converging, when it starts getting smaller, and then it starts moving closer to one another, then it could be signifying a potential, reversal in market movements. It could be signifying a potential reversal in market movement. Right. Let's look at this. For one, gold prices are rising. Risen today very well. Um we've seen a very good movement to the top. All right. We're closing here. Then we take questions and answers. I'll read out some questions and answer them. But let me quickly insert RSI to it and see what we can do with this. So let's start. All right. So now gold prices are rising. Okay. And from what we can see on RSI, we're like into oversold or yes, overbought already. We're like into overbought already. And then if you look at normal price action on the screen, it's like gold is back towards this level where it has found resistance for the past how many days? Like price has been unable to pass this level for a while. Look at it. For like a while, a long time, this level has refused gold passage. That's a very good level of resistance right there. So there's this level of resistance in front of price that has always, pushed price down. Every time price goes there, it just sends it back down. Every time price even goes close, it just naturally sends it back down. So that level has been tormenting price for a while. Actually, it's a peak level, so it's not surprising. It's a peak level of resistance, which means under normal circumstances, there's expectation that, well, there's possibility that prices should fall again from that resistance. It's not sure, expectation. Now, if you go to RSI, RSI says I'm 70. I'm well into I'm well into overbought territory. And we know that when RSI gets into overbought territory, we know it means that, an impending sell, right? So RSI also is saying downside, but not only because it is around 70. No, not just that. Also because RSI is showing me a very good level of resistance here. Look at it. Look at this resistance here on RSI. Look at price action there. You see, this level has served price. This level has definitely served price. Look at it. Price action 2, price action 3. Even when price got close again, price action 4, which means now there's confluence now with what we can see here and what is also available at this point, which means RSI and the chart, the resistance on the chart is more or less telling us about downsides in the market. So my market opinion and what RSI is saying fits. Yes, I feel like this level of resistance is solid. I'm not sure if price can break today. Don't forget, that's just based on technical levels. We've not added fundamentals yet, right? So this looks good. Resistance, also resistance on RSI around overbought territory, which means downside. But the question is, what does MACD have to say about this? So what's MACD saying? Listen to this. MACD is currently above zero. Yay. MACD signal line has moved above zero. MACD's signal line is currently above zero, which means MACD is saying, well, looks like there is a building bullish momentum now. But don't forget, it is also lagging. It's not leading, which means now that MACD is saying I'm above zero, what do I feel? I feel like, well, I will not jump into a sell. That's first thing. Listen to me. I would not jump into a sell, right? Even though there's a resistance, even though RSI is saying, well, I believe what you're saying, downside. Now that MACD is saying, oh, looks like there is a bullish momentum now. Well, it means no sell right now. No sell until I see what wants to happen with price. Since nobody's chasing you when you trade, there is nobody running after you. Confidence in trading and patience is one thing you must have, because even though you are expecting that prices should find resistance at this point, don't forget that If there's one thing about price, resistance can be broken. A resistance has been tested like 1, 2, 3, 4 times. Now that price is coming back now, it might find that push to go above it, offer us a retest and go up, which means there are two key things that can happen. It is either price finds resistance, it falls, or finally it is able to find that push above the resistance and it breaks it. So now MACD has said, wait, listen, MACD never said I should buy because MACD's bar has not gotten bigger. Don't forget, the bar is still small, which means it is only the signal line moving above zero that we have. We don't have big bars here. It's still small bars. The small bars are not enough for me to say I am sure it's going to buy. No, 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 no. The bars are not big, which means the momentum is still not that strong. It's not solid. All that one is just telling me is telling me to calm down. It's just saying calm down, calm down. There's still possibility that buyers might find a push beyond that resistance. So I'm just waiting. I'm just waiting to see what wants to happen. I'm just waiting to see if prices are going to be able to find that push above, this particular level of resistance or not. Now, if you look at this, resistance is there, it agrees with RSI, but MACD is out there saying there's a bullish momentum building. Calm down. The bars are not big yet, so it's not yet saying buy. It's not saying buy. It's just saying there's a bullish momentum building because now my signal line is above zero, but calm down, calm down. So all we need to do is watch how price action wants to play this before we make a decision. So we are not living our life on price action. We aren't. We're not living our life on MACD or on RSI. We're not asking you to just put them on your screen and then forget the things you already know. You see, that is why there's a trajectory in what we have been teaching you. For those who started with us when we started this webinar series, you know that we started with teaching support and resistance first. That's the first thing we taught. Teaching support and resistance. Then we went ahead to teach price action, trading pullbacks, and breakouts. Then after that, we taught moving averages and Fibonacci. Then we moved on to the flow system before bringing you down now to RSI and MACD. So we're not teaching you to pick one thing and say, this is all I need. We're teaching you how to be self-sufficient and how to use some of these things as conference levels or levels that can help you know if you're about to enter into a bad trade or not, or levels that can ask you to wait until you see something happen before making a decision. This is what it is, guys. Like I would always say, no indicator in of itself is self-sufficient. It is still subjected to your usage, which means you still have to determine how you're going to use that particular indicator. Please don't forget the things we've discussed today. And like I said, it is going to be available on YouTube for you to, rewatch, peruse again, get some of the things you did not get, and, find yourself. We're also open to questions and answers. I'm going to read out some questions at the close of the session and I'm going to answer them. All right. So please, this is important, but please don't forget the keys of the lesson. Please don't forget. Thank you for joining us today. My name is Menelak Yola, market analyst at HFM Nigeria. I am going to